So, good evening, good morning if you're watching a replay or if you're in another country, good afternoon. I am Bernadette L. Harris. I'm the founder of this group, the Efficient CEO Movement. And this is a group that is a labor of love for me. This is a group where I mentor startups and small business owners to help them become more efficient in their businesses and to grow their businesses. My accounting firm, we're coming up on 21 years of existence, and I've been committed to keeping small business in business for those 21 years. And so I'm here to share all of the wisdom that I have gained from education and experience with you today. So today we're going to talk about a topic that is so popular. I coach 6 and 7 figure business owners, and even they struggle with some of the things that we're going to talk about today. They ask this question: how do I pay myself as an owner? Or should I be paying myself? Or how much should I be paying myself? So we're going to talk about that tonight. If you have any questions, drop them in the comments. I will go back and check the comments. If I miss them while I'm on the live, I promise you that I will answer them after the live. This is my 15 minutes of fire, so I am going to be quick. So I want to kind of start off with a real short story, because this is an important reason why you need to pay yourself as a business owner. When I started my accounting firm, like I said, almost 21 years ago, my daughter was very young. She was 7. I don't know, 7. I'm not doing that math right. Maybe 8, something like that. But anyway, she was young, and she's always been a very integral part of my business. At 9, she was sorting receipts and entering stuff in Excel, and by the time she was a teenager, she had learned how to do QuickBooks. So she was always working in the business, and I used to pay her a little bit or whatever. But one of the things that, and I didn't realize this until about 2 or 3 years ago, but one of the things that I realized is, as I was growing my business, it was a struggle. Like, things are great right now, but they haven't always been great, right? So I don't have no money problems right now, but this has not always been the story. And I can remember when she was growing up, there were times when I would say, oh, well, we can do this when so-and-so pays their invoice, or we can do that when such and such, or we can't do that because I don't have the money. And I remember when my daughter and I were getting ready to start our podcast, and we were planning out some of the episodes, and in one of the planning sessions, I realized, or I learned, that she didn't want to be an entrepreneur because she said she didn't want to be broke. And that stung, right? Because it was like, whoa, here I am trying to set this example about entrepreneurship, the freedom that it gives you and all of these things. And that was what she took from it. Like, entrepreneurship means that you're going to be broke. And so what I realized, and one of the things that I tell my business owners when I'm coaching them, it is so important that you pay yourself in your business, because if you're not paying yourself, if you're not paying yourself enough, the people who are closest to you will likely resent your business, or it may change the way that they feel about entrepreneurship. And so that's why it's really important for you as an owner to think about how you're going to pay yourself. And so some of the reasons why people don't pay themselves in their business is, some of it is because they don't know how, when, how much. But the bigger issue is usually because they're not charging enough to be able to cover their costs and pay themselves. That is a whole nother session that maybe I will talk about later. But let's talk about paying yourself as an owner. What are some of the things that you need to be thinking about as you're paying yourself as an owner? So the big question is, like, how do I pay myself? Do I write myself a check? Do I pay my bills from my business account? How do I do it? So first of all, I need you to make sure that if you are in business and you're legit with your business, then you need to have a separate business account. A business, even if your business is sole proprietorship, you're doing business in your name, you just get 1099 income, whatever the case may be, get a separate bank account. Everything for your business, all the income from your business needs to go to that account. All the expenses for your business needs to be paid from that account. And then when you pay yourself, you're going to pay yourself from that account. So we'll talk about specifics on the how, but I want to make sure that from the start that you have these separate accounts, a business account and a personal account. Your accountant, if your accountant looks at your business bank statement, they should know where you buy your shoes, where you get your hair done. They should know your favorite restaurant. They shouldn't know any of those things because it shouldn't be happening in your business bank account. That is not how you pay yourself. You pay your business bills from your business bank account, and from your business bank account, you pay yourself and pay your personal bills from your personal bank account. So making sure that that is clear. Hopefully everybody's good on that, right? So then let's talk about, like, how do you pay yourself? So one of the things that is so important is that you establish some type of regular frequency that you pay yourself, right? So this legitimizes your business. This is a way to make your business look like a big girl or a big boy, right? You are a grown-up business person. You pay yourself every Friday, even if it's $500 on Fridays. You pay yourself $500 on Friday. Set a pattern to show that you are paying yourself on a regular schedule, not every time you need some money, you know, you going to the ATM and pulling out $50, or you're transferring $100 to yourself, or Zelling $25 to yourself. Don't do that, because what that looks like is you're treating a business account like your piggy bank, as opposed to treating a business account like a business account. So the first thing I want you to do is set a regular time that you're going to pay yourself. It could be once a week. It could be the 15th and the 30th. It could be every 2 weeks. It could be once a month. Whatever it is, you create a frequency and stick to it. Again, this shows that you are being consistent. It shows that you are operating like a business, right? Then I want you to, systematize it, right? And so if it's something where some banks where if you bank at the same bank for your business and personal, sometimes you can set them up to where all of your accounts are connected. So one of the banks that I bank at is Capital One. And with Capital One, when I log into my Capital One account, I see all my personal accounts as well as my business account all in one login. And if I wanted to, I can make transfers from my business account to my personal account and vice versa. So if you have a business, if you have a bank like that, you may be able to do transfers like that. And transfers are fine. So if you do a Zelle transfer, or if you're just transferring, if your bank allows you to transfer from your business account to your personal account, that is fine. You can do that. Now, the other thing that is important is it depends on your entity type as to how you actually pay yourself, right? And so what I mean by that is your business taxed as a sole proprietorship, a partnership, a S Corp, or a C Corp? And depending on the way that your business is taxed, it's going to determine how you can pay yourself. So I'm going to run this down real quick because I don't have a lot of time to talk about entity types. Again, maybe that'll be another session that we do. But if your business is taxed as a sole proprietorship, meaning there's one owner, or a partnership where there are multiple owners, then in those instances, the only way that you can pay yourself is by taking an owner's draw. Sole proprietorships and partnership owners do not get on payroll. I hear people say stuff like, oh, I'm gonna put myself on payroll and da-da-da. And it just depends on the way that your entity is set up. So if you're a sole proprietorship or a partnership, you do not get on payroll. You do an owner's draw. So you can either do it by making that transfer from business to personal, or Zelling that amount to yourself. Just make sure that it is systematic and you're not digging in the piggy bank all the time, right? If your business is taxed as an S corporation, then you can pay yourself two ways. You can pay yourself with a salary, and this is when you're on payroll and you actually get a W-2 from your company, or you can take an owner's draw or a distribution from your company. So my clients that are S corps, and most of my clients are, because my clients are 6 and 7 figure business owners, and so the ones that are S corporations, we set it up to where a part of their salary, a part of their income comes through salary that goes through payroll, W-2, and a part of it is done through distribution. And it is very important that you have a conversation with your accountant to figure out what that math needs to look like. I don't want to give you no formulas because it is very, very specific to your situation, right? And so, but understand that there is a method to the madness, and you do want to make sure that you are you're using some professional advice in determining how you do that. Now, it's a delicate dance. Some of it is salary, some of it is distribution. And by making sure that you have that formula just right, you can maximize the benefit of being an S corporation. Now, the fourth entity type is a C corporation. If your business is taxed as a C corp, the only way that you can pay yourself is a salary. That means everything is on W-2. You cannot take owner's draws as a C corporation. Well, let me take that back. You could take a distribution as a C corporation, but if you take a distribution, it's going to be double taxed. What does that mean? That means that if you take a $10,000 distribution or dividend, is what it's really called, from a C corporation, the corporation has to pay tax on that $10,000 and you personally have to pay tax on that $10,000. Nobody is trying to pay taxes on the same money two times. And so you don't want to do that. And again, you want to make sure that you have a strategy. So I have like 3 minutes before we wrap this up. So I'm going to go through my last point and then I'm going to scan the comments to see if we have any questions. So now some people say, well, how much do I pay myself, right? And this really depends. It depends on the stage that your business is in, and it also depends on your goals. So for instance, let's say, for instance, if you know that you want to buy a house and you're looking to buy a house in the next 2 years, then you need some W-2 income, right? And so you need to be paying yourself, and you need to show that or if you're a sole proprietorship, you need to show that your business is profitable, right? And so depending on what those goals are will determine like how much you actually pay yourself. It also depends on how much money you have, right? Because you can't pay from, you can't pay from an empty well. The other thing is, how much does your business require as far as reinvestments? And so reinvestments is like when you're leaving money into the company so that you can grow, right? So you don't want to take everything out of the business. You want to be able to leave money into the company so that you can hire a VA, or leave money into the company so you can get that new system that you can't afford to pay for now, but if you can pay for it later, it's going to make you more money, something like that. So you want to think about reinvesting into the business. How much money do you need to leave in to be able to do that? And the last thing that you want to think about is how it's important to have retained earnings. That means it's money that you didn't take out. So if a part of your long-term strategy is to get funding for your business, then the bank they're going to want to see that not only have you reinvested in the company, but you've also left some money in there, like you're not bleeding the company dry, because they need to know that you're going to be able to repay that loan. And so retained earnings, money that you leave into the company, is also very important. So the key thing that I want you to take away from this, hopefully I gave you something that you can use, but the key thing that I want you to take away from this is you have to have a strategy. It is so important to make sure that you have a strategy. So if you have an accountant, make sure you have a conversation with your accountant about that strategy. So I'm gonna comb the comments real quick before we wrap this up. Again, I appreciate you guys for being here. And let's see, are there any questions? So somebody asked, is the LLC done the same as a sole proprietorship? It depends. So an LLC is like a chameleon. It can be taxed as any of those 4 entity types. So it depends on how you've actually set your entity up. And a lot of times, most people don't know because they set it up themselves. But if you set up your entity and it's only one member, the automatic treatment is a sole proprietorship. So you cannot be treated, you won't be able to be treated as a partnership because it's only one owner, but you can't be treated as an S Corp or a C Corp unless you make an election. So I hope that helps. Okay. All right. So I don't see any other comments, but if you're watching the replay and you have comments or questions, drop them in there and I will come back and answer them. Thanks, guys, for hanging out with me. I will see you next week.